Good morning, guys. What's up? This is just going to be a quick synopsis on the FX and futures markets that I track. So let's really quickly go over all the levels. This is a dollar index. Currently, we are sideways. I am still bearish this unless we get back above 91. However, there's a bit of a congestion zone around here, so until we're above 92 I won't be completely bearish, but I still might be playing off of the 91 level to target at least 92, and then below 88.27 for me will be bearish. Alright, next is Euro USD. So Euro USD is creating a lower high, and it's currently rejecting off of those highs. It is finding resistance at the 38.2 retracement of the entire decline from 2008 to now. If we mimic the dollar index and the Fibonacci that I drew from there to the 2011 high, you can see we haven't reached the 50% quite yet. So if we do break above last week's high at 124.85, we can probably target the highs at 125.50, then 126.39. All right, that's what I am definitely targeting. But this is a little bit more viable. I find that the price is respecting the Fibonacci a little bit more. So if we're reversing at 38.2, we can probably expect a decent correction here to correct most of the price action to at least 2031, and that's below these two lows. So I know that was kind of confusing, so let me just go over it a little bit in layman's terms. Below this low and this low is counter trend bearish to 2031, and below 2031 I'll most likely be completely bearish to at least 17. Okay, and then back above last week's high, let's say back above 25. I am a weekly close above 25. I think that we're gonna definitely be going to at least 132. It's Euro USD. Let's go to Pound USD. Pound USD is pretty cool because right now it's rejecting off the weekly 200 moving average, and it's creating a lower high right here. And it is in a nice decent range. So we do have the 50% of this range marked out as last week's low. So if we get below like last week's low in this little center range, we can target the bottom of the range. But I'm not completely bearish until we get below the entire range low at 137.43. Okay, so I am only playing buys until we get below 137.19. However, if we get below 139.20, I am most likely going to sell just a little bit to the 137.50 level. All right, let's go over USD CAD. USD CAD created this large equal measure move, ABCD into the 50% retracement and bounced heavily, and now it's created an ABCD of this current rally right here, and we are oscillating right at the 23.6% retracement of this incline right here. It's really hard to say where this is going. It's definitely diddling in the middle. If you were to stick a gun in my head, I am definitely going to stay bullish the United States dollar versus the Canadian dollar. Just because I am a little bit biased to the north side of the dollar index, and I'm a little bearish oil at the moment. However, just by looking at the chart, I can only play buys, and I will most likely not play any sells until we're below 26.81 in this line right here. Cool. Just the way I do trade, I trade on lower time frames, so I will most likely I'll sell a close below last week's low. I'll sell a close below last week's low, and I'll target at least 2680. And if we go below that, then we are in a different cycle, and we will reevaluate. But I am still definitely bullish, and I'm bullish at least up here to 36. Let's go to the Aussie. All right, we are currently bearish. We haven't quite tagged our 38.2% retracement of the incline starting at the beginning of 2016. So I think that since we closed below last week's low, I still think that it is viable. Actually, we didn't close below last week's low. I'm sorry about that. So I'm going to be watching. It's going to be tough. We're definitely not going to be, I'm definitely not bullish until we get above probably this range high, to be quite honest. This is very choppy downwards pressure towards the trend line and support. So I am going to remain bearish this until we get above minimum the middle of this range at 78. And if I were to get bullish, then I would target 80. Watch out for this 76.28 level. However, if we do break this, it's definitely going to be a nice fall to at least 74.75. So it's a very looked at trend line. The Swissy, this man, this thing is fucking confusing. I'll tell you that much. All right, so let's start. So from the entire range, from the all-time low in 2011 to the 2016 highs, we have found resistance after passing through the 23.6 and then finding resistance there. So we are currently in a range. I'm not bullish, nor am I bearish right here. I am more biased toward the bull side, however. We have clear definable areas where we know that if it fails, then it's going to go lower. So below the 86 or the 94.62 level, I'm going to be bearish to 90.88. However, if we can get above last week's high, which is a double top area, then we can expect higher prices. And if that were to happen, where am I going to target? I'm going to target, I'm going to target the 50%. I'm going to target 97.64. That's a good pivot level, and if we can get above that, then most likely we're going to go to 78.6 at $1. All right, that is what I'm looking at with the Swissy. So we did the Swissy, the CAD, the pound, dollar, the Aussie. Let's go to New Zealand. All right, the New Zealand dollar is in a very, very sideways, choppy consolidation right on the weekly 200 moving average after creating an impulsive upswing. If you were to ask me if I were bullish or bearish on this right now, I definitely would say bearish. I know that it's probably counter-reactive. The only reason I would say bearish is because we are below the 23.6 retracement of this swing right here. And unless we get above this 23.6 retracement of this current swing, market red, 1 second. So unless we get above 72.82, then we are I'm gonna stay bearish. I really don't like these larger consolidation areas. It's really hard to draw fibs. Actually, it's really not that it's hard. It's that they respect each other a lot, so that there's a lot of noise. And right now in the New Zealand dollar, there is a ton of noise, but there's still money to be made on both sides, the north and the south. Right now, I'm just a little bit more bearish. And if we break below last week's low at 71.80, I'm going to target 70.50. And if we go back above last week's high, which is also our bull bear line, I'm going to target the top of the range at 74.39. And after that, the 50% retracement of the entire decline at 75.34. So that's what I'm looking for in the major FX pairs. Let me go with oil now. Oil is currently in a corrective state in between the range high of 2013 to the range low of 2016. And we are currently sideways. And if you look at this current swing up right here, 1, 2, 3, this is an equal measure move. Let me show you. So it stopped at an equal measure move. And if we get below and stay below the 64.55 level, as long as we stay above, let me make this easier. As long as we stay above last week's low on maybe a daily basis, we will, well, I'm going to expect a break of the 66.90 level, and I'm going to target 71. However, if we break below last week's low, we're going to stay in this range, and I'm going to target the lows at 58. However, I'm not going to be selling this until we get below 57.05. I'm going to consider us still in a range and oscillating until we get below 57. Let's go to silver. Silver's nice. Silver's just been oscillating for a while. It's very clear that if we do get a breakout, it's going to be a pretty important breakout. One second. I should have came prepared. Let me see if I can. So we have 1, 2, 3, 4, 5. I guess that's what the Ellioticians would call impulsive. And now we're doing 1, 2, 3, and then we're sideways. All right, we are definitely bouncing off the 78.6. We went to the 338.2 to the 68.1. What are we doing? We are definitely sideways. That's obvious. If we can break above last week's high and close above the weekly 200 moving average in silver. By the way, I'm pretty sure that there's more data on this. This is just the what 1 ounce, the 1,000 ounce silver futures ETH. And if we get above, okay, if we get it, my bad y'all. If we get above last week's high at 1683, I'm going to target the range high at 1746. Okay, however, if we stay within this range and if we break below last week's low, it's going to be catastrophe, and then we can just target either one of these lows, this low and the 1527 level to be tagged again. If we do break above the 1743 level, it's all gravy until 1832, and above 1832 is going to take us to newer highs. This is very corrective, and if you look at the way it's bottoming, it's kind of rounding out. So hopefully hopefully it will turn up soon, and we can get some longs in to target higher prices. All right, let's go to gold. Gold is very interesting right now. So everybody's eyeing the, you know, the larger hidden shoulders. It's in super consolidation. You know, I'm sorry guys, but I'm not gonna buy a breakout of it because everybody is looking at it. I'm not gonna buy a breakout until we can close above 1390. Until we get above 1390, I'm gonna consider us still in this sideways range. And if you look at each shoulder, this shoulder that we're in right now, hold up 1 second, I didn't prepare for this one. So this is a very symmetrical shoulder as a matter of fact. So if we break above the neckline, which would be this line right here, let's draw it from this side. That's more viable. We can most likely target the higher prices, and that's above 1370. But I'm gonna be wary of a false breakout just due to the amount of people who are looking at this level, and I'm going to wait until we're above 1390. And 1390 will be my confirmation, and I'm going to target higher prices. Oh shoot. All right, and then let's look at the stocks. Whoo, stocks are crazy, huh? So we're finding support on the daily. Let's go down to the daily chart. On the daily 200 moving average, and also the 61.8 extension of the first mover's correction, and it is holding up. So right now, and then we're finding resistance at the 76.55 level. If we get above the, I'm going to say 76, this spike in the center is kind of annoying. It's more of a range. So if we get above this box right here, I'm gonna say 76.70, then we'll definitely be bullish. But a nice decent close above 76.60 will be bullish. Until then, I'm gonna remain bearish and stay confined within this range bound. If we close below the daily 200, it can be a false breakout. If we go back in the past on the daily chart, although it does provide significance, the daily 200 moving average, price likes to oscillate around it because there's orders being built above and below it. So I'm going to remain bearish in my outlook right now until we get above 2680. And I'm going to remain bearish, and I'm going to sell below 2580, and I'm going to target 2457, and then after that 2356. If we do get a drop in this would be good for the dollar and would further solidify the bullish reversals in the United States dollar and its forex counterparts. Sorry guys, I was looking at something else. I think that's it. If you guys have any questions, just let me know. I think I'm gonna do videos from now on. I like these things. So peace out, have a good weekend, trade good, follow your plan, keep it real. Late.